Fantom is about to make another rally that's based on a statistical analysis. It's based on a backtest, a simulation of buying and selling the FTM token that tries to time those rallies and those bear markets quite well. Now, when we look at the results of that backtest, it's very, very impressive. So look at this. In white, we see the Fantom price, and in green, we see the result of that backtest, of that simulation with that trading strategy. And when we look at this on a logarithmic scale, so instead of here, a linear scale, we have instead 10 axes with each of those horizontal lines. We can also see what happened in the early days. And this is a very nice constant outperformance, right? When we just look at the simulation, we just forget about the price itself. This is a pretty constant portfolio increase, right? This looks quite nice. Now, what's the strategy here? It's very, very simple. It's a strategy that I'm presenting several times on this channel. It's timing the market using moving averages, using the best moving average that worked historically in the past. So let's look at this. This is the Fantom price in green, and in turquoise, so to speak, right, in this bluish green, we see the moving average. And you want to be buying whenever the price is above the moving average, and you want to be either selling or betting on falling prices even, right, shorting the price whenever we get the cross from the top to the bottom. So we would be riding this wave upwards and we would be betting on falling prices downwards, buying in here again, and then again betting on falling prices. We do have our few fake outs, but in general, the idea is always you try to be following the trend. And this is the reason why I'm bullish again on Fantom. We have just crossed this moving average. Now, how does this all work? Why do I take this moving average, and which one is it? It's the 38-day simple moving average. Okay, so what you see over here is the 38-day. You can simply just draw this in TradingView. So you go to tradingview.com, you press /, you enter simple moving average, and then you adjust the parameters of this. So let's look, for example, at this red line over here. It's just a random moving average. You double click on this, you can adjust the length. So this is 100 days. And when you reduce the duration here, you see how this line gets closer and closer to the price itself, right? And so when you have a very short duration, you tend to buy in very quickly, you tend to sell very quickly, but you also tend to have a lot of those fail signals, right? You might be buying in and selling and buying in and selling, and especially when we've got sideways trading action, for example over here, you're always buying high and selling low, and you're destroying your portfolio basically with these kinds of failed signals. So you want to know what's the best duration. Do you want to take the 50-day? Do you want to take the 100-day? Whatever it is, right? And you can simulate this, right? You can figure out what is the best moving average, what historically worked the best, and how well does the strategy in general work. Because what's important here is that we don't just cherry pick what worked best in the past. What's more important is that in general, the strategy tends to work, right? So even if you get it slightly wrong, that it still works. And what we see over here, this is the result of 200 backtests that I've made. Or to be more precise, even 400 backtests. So let's start with the simple moving average. Let's ignore the exponential moving average. So what we have here on the x-axis, right here at the bottom, that's the duration of the moving average. So from basically 0, which just means we look at yesterday's price, all the way to 200. So the 200-day simple moving average. And then we've got in black here, the buy and hold line. So this is simply just a reference of what would we have gotten during this backtested time period if we just bought and held Fantom. So this was 169% per annum. The backtest, by the way, starts in October of 2018. So the first 200 days I don't trade at all, because this is the time where we first need to get the data to calculate that moving average. Then the trading starts, right? So in May of 2019, and then we compare those different moving averages. So this is all automatically generated. You can also download this sheet within the premium membership. So a link is in the video description. So we do this backtest, we figure out what are the best moving averages, and I tend to use the 38-day simple moving average. Alternatively, you can also take the 58-day. And what I find interesting around this result is that most of those moving averages outperform buying and holding quite a lot. So if you go too long in duration, we don't tend to outperform. We tend to get similar results to just buying and holding, because then we are very, very close to just buying and holding. Right? When the moving average duration is very long, we react very, very slowly to the trends. And this is a different problem occurs when we are very, very short on the moving average, because then we tend to go in and out very often. And this backtest also has trading costs included. So 0.2% of trading fees per trade. So you don't want to go too short, because then you're just always trading and generate a lot of fees. But you also don't want to go too long, because then you're very close to buying and holding. And so you can optimize and figure out what's actually the best moving average. I tend to take the shorter term moving average, but yeah, you can also take the 58-day. Now what we have here in red is the best exponential moving average. So that's a slightly modified version of a moving average. I always backtest both, but I noticed with a lot of assets that usually the simple moving average tends to actually outperform. Now the reason why I take the 38-day is because I also want to draw an exponential moving average. And I want to have somewhat different kinds of duration for the moving averages, so that I do get somewhat of a neutral timing, right? So I know when I need to be bullish, I know when I need to be bearish, but I also know when a decision is not really clear. And that's when the price would be between those two moving averages. So the 38-day SMA, and for the EMA, we've got the 60-day. So let's draw both of those. Let's take away the random moving average. Let's take the best EMA, and let's take the best SMA. The best SMA being here. And we've crossed both of them, right? So this is bullish. This looks like Fantom has again some room to grow from here. Now these kinds of backtests I've done for several moving averages. There is a script, again, premium membership, where you can download this, you can copy paste this into TradingView, and you've got quite a few altcoins where I've done this best moving average backtest. In the past, I only backtested up to like the 50-day simple moving average, but now I modified the sheet to backtest up to the 200-day. So there are now updated moving averages. I do this now altcoin by altcoin, checking what actually works also beyond the 50-day. And so we see also for Fantom that there are good moving averages beyond the 50-day that tend to work pretty nicely. And the outperformance is interesting, right? The outperformance mainly happens during bear markets, right? So when it's a bull market or when it's a mixed market, we simply just perform in similar fashion. But during a bear market, we really start to outperform by not being in the market or by betting on falling prices, right? When Fantom is falling, here we are gaining because we are betting on falling prices. This is really where we gain most of the outperformance, this 100x in the end, right? Because the outperformance, it compounds, right? You just make a 10x, then you make another 10x on the benchmark, and suddenly you've got a 100x, which, you know, on a linear scale, is really, really impressive. So this is why it looks quite interesting to do these kinds of backtested approaches. I like them so much because it's not just randomly picking data, right? It's not just, okay, we over-optimize for the parameters of a certain indicator, and sometimes it works, sometimes it doesn't, and we simply just cherry pick the time where it works. The reason why I like this so much is because most of those moving averages actually outperform buying and holding, right? There's a strong bias towards outperformance. So there is real benefit in trying to trade, right? In trying to catch those waves. And these kinds of results we get for most altcoins. This doesn't work as well in stocks. So when you do the same kind of analysis in stocks, it doesn't work so well because probably there's so many quant traders already there, so many hedge funds, etc., that take advantage of such a strategy. And the more people use something like this, the less it works, obviously. But crypto isn't yet as advanced. And so there's a lot of retail, and there's a lot of hype. And when there's a lot of attention on a crypto, this hype compounds and the trend continues, and vice versa, right? When it goes down, then there's a lot of liquidations happening. So the trend continues as well. So you've got these magnifications on both directions, and you can simply just follow the trend. And this tends to work in inefficient markets such as crypto, and especially altcoins, very, very well. So that's why we've got all of those back tests. And so if you also want to get your specific altcoin back tested here, right, simply just post this in the chat, in the premium chat. But yeah, that's what I like here about Fantom. We see a similar kind of breakout in different cryptos. There are very different durations for different cryptos. So for example, Ethereum has way shorter best moving averages than Bitcoin, which also makes sense, right? Bitcoin, the investors, they are way less reactive to the market. For Ethereum, people tend to trade in and out way more often. They might move their ETH to the altcoins, etc., go back and forth. So even though there is a lot of correlation, within crypto, the best moving averages cannot just simply be transferred from one asset to the other. You really have to backtest each asset individually. There's also in the Telegram group an indicator alerts channel, by the way. So whenever a moving average gets crossed, an automatic message here gets generated. Okay, so looking forward to your feedback. There's also free channels. So there is a free Discord and a free Telegram that's down below. So looking forward to see you there as well. I hang around there very often as well. So feel free to simply chat. And then, of course, looking forward to see you in the next video as well. Bye-bye.